Good evening. Thank you very much for joining us here on Urban Debate on Mirror Now. I am Heena Gambhir and welcome to the 8 p.m. edition of the Urban Debate. Amid concerns over the recent wave of Omicron, Finance Minister Nirmala Sitharaman is set to present her fourth union budget on 1st of February 2022. With just few days left for the all-important event of the Indian financial calendar, various market experts, economists and financial experts have their eyes on the budget session. And here on Mirror Now, we've been focusing on the expectations of various sectors. We have spoken about what the healthcare sector is expecting from Budget 2022. Then we brought you a show on what the middle class is looking forward to. Tonight, we are going to put the focus on the India Inc. What is it that the industry and the economists really are looking forward to as far as this very important budget is concerned? The second budget of the Modi government amid a pandemic, and this one is more crucial because one, it comes when India is battling the third wave of COVID. On the other hand, there is an election season too that is going on. So will it be more populist? Because many believe that this is going to definitely have an impact on the budget announcements of Finance Minister Nirmala Sitharaman. So today our focus is what the industry is looking forward to, how the economists are really seeing this very important budget of the Modi government. And joining us on the broadcast this evening is Naina Lal Kidwai, Indian banker, former independent director CIPLA, former FICCI President, former Group M and country head of HSBC India. And we are also joined by MS Unnikrishnan, former MD and CEO Thermax Limited. Joining us on the broadcast this evening is Professor Arun Kumar, Chair Professor, Institute of Social Sciences and former Professor and Chairperson of Center for Economic Studies and Planning, JNU. I appreciate all of you for joining us here on Urban Debate on Mirror Now this evening. Ms. Naina Lal Kidwai, I want to begin the discussion with you. You know, this budget is special, as I mentioned, because of two reasons. One, it comes in the middle of the third wave. Second, it comes in the middle of election season. So looking at these two factors, what is it that you are looking forward to?
What am I looking forward to? A lot. And the good news is that the economy is still moving forward. The bad news is that it is a K-shaped recovery, and we do need to look at what the economy needs to achieve to be more all-encompassing. So from my standpoint, I think a stable tax regime alongside some of the continuing reforms in GST, no more rise in import tariffs, because we've seen that import tariffs, while they're brought in to protect some industries, are creating input increases for a lot of companies, particularly for exports and in terms of the price of those goods in the consumer market. So import tariffs needing a good hard look, at least stable, if not brought down. High quality spending on capex and social welfare schemes, particularly the NREGA, urban NREGA needing to be looked at, and also ways to increase rural demand, because we are finding that consumption at the rural level is hurting a lot of companies. So how can we put more money into the hand of the rural consumer? But in fact, I would say money into the hands of all consumers. Fourth, I would say the state governments have been crying for help, so a helping hand to state finances in terms of some of the advanced installments of tax devolution. Government has already announced one such move, and therefore continuing to assist the states so that they can take forward their programs and in fact recover from the effects of the pandemic. And I would just say that the fifth would really be how we look at government borrowing and the cost of government borrowing. It impacts our bond markets. We need to see that there is a better development of the retail debt market and the ability for India and India Inc. to raise funds in the debt capital markets and not just be overly dependent on the banks.
Okay, that's an interesting wish list that you've given to us, Ms. Naina Lal Kidwai. Of course, we'll be looking at some specific ideas that you've mentioned for our viewers as well in just a bit. Let me take the opening comments from Mr. Unnikrishnan as well. So, what is it that you're expecting this time, given the two important events and their influence on Budget 2022, which we cannot really ignore?
Well, I would go along with the overall picture Naina has mentioned about, but let me clarify a couple more points that we don't expect it to be non-populistic in any case because we're used to that. But let not the populism encroach upon to such a level that there is nothing left for the growth potential for the country. So being an election year, and that is very important for the political dispensation, we would expect it to be, and we are willing to accept it, no problems at all. But to counter that, I need to give you a couple of more points that we have seen the highest ever exports almost expected to be touching $400 billion. First ever time, almost $100 billion growth between 300 to 400. So that extra money has come into the country in foreign currency. Next is the tax collection is going to be exceeding because we still have some more time, a quarter left over. In my expectation, our tax revenues are going to be exceeding by at least 15 to 20% of the total realistic number that the government would have taken the last year. And we have bounced back despite whatever one would have talked about in the third wave. Many countries in the world, including the developed economies, are still struggling. But at least the industry, representing the industry, I can say that, well, we are back to almost normalcy and we are not looking back. Yeah, what Naina mentioned about, are we through with COVID? No, certainly not through with that. And I also am cognizant of the fact that there could be anything related to the health issues happening going forward in fourth wave or any waves. Or we still have a standoff with our neighbors, let me say that. These are the context in that one. However, with this kind of condition that is prevailing and positivism prevailing, industry having recovered, we have got a lot of expectation. So frankly speaking, we are looking forward to a major government capex, which our finance minister announced some time back, that 100 lakh crores of capital capex will be put on ground in the next 5-year period of time. So we look forward to in the current budget provisions to be made for the first year of a 20 lakh crore worth of investment in roads, railways, ports, and all the infrastructure related, which will be indirectly creating a substantial demand growth in the country. And second, we look forward to having even power industry because whatever said and done, we have upped our climate change mitigation program to 400 gigawatt. So a lot more has got to be happening near to 50,000 to maybe 60,000 megawatt of solar, wind, renewable energy related projects. Right. Where that government has got a control over there. So the next item is EV. The EV is something which the government is already cognizant of, that we are expecting policy decisions and support related to that. And the last item from my side to talk about is that PLI had been a major welcome introduction by the government of India, though we had been demanding for that for quite some time. So I'm expecting in the current budget, there will be many more PLI areas beyond whatever is done in API and electronics, to ensure that our dependence on import from a specific country and the trade deficit of maybe $60-70 billion can be offset in the next maybe 3 to 4 year period of time. It has got to start. So I stop over here. A lot more is there in our wish. But I mean, I would say that these are the big mota moti in your typical language of India. They're mota moti. These are the things that we're looking forward to.
Well, but both of you have covered almost everything. And Professor Arun Kumar, I wonder what will you have now in your wish list, because a lot has already been said by Ms. Naina Lal Kidwai as well as Mr. Unnikrishnan. And if Ms. Nirmala Sitharaman is watching, she really must be going back to the drawing board to understand how much can she really deliver, because there's too much of pressure this time, isn't it?
So, a budget, when it comes, it looks at what the problems of the current year are and what is it that, needs to be done to solve those problems. And then, what is it that can be done additionally to boost the economy. So, these are the parameters within which the budget is drafted. Now, if you look at the economy in Q2, we have just about reached the level in 2019 in the Q2. And Q3 and Q4 would be hit by Omicron because contact services have been hit, unorganized sector has been hit. So the economy is unlikely to reach the 2019 level as a whole. And this means that, 2 years of growth has been lost, so the economy would have advanced by at least 8% in these 2 years if the pandemic had not come. So in terms of the potential of the economy, we are at much less than where we should have been. So, that means that there'd be trouble in terms of, the tax collection that could have been there. But on the other hand, as you said, the elections are there, very important election, UP. So there would be an increase in expenditures that would be there. Subsidies, whether it be on food or fertilizer. Fertilizer prices are high internationally. So fertilizer subsidies would probably rise. Food would be something that would continue to be distributed. So therefore, expenditures would have to be incurred there. Also, income in the hand of the unorganized sector is very important at this point of time because they are the ones who've been hit very hard. And that is what is causing a decline in the demand in the economy. If you look at the RBI data, then the consumer confidence, which was at 105 in January 2020, just before the pandemic, has been hovering at 55. So consumer confidence has not yet recovered, and that's why demand for several segments is not good. Now, as my co-panelists have said, there's a K-shaped recovery. Some sectors are doing well. They're expected to do well, whether it be telecom, whether it be IT sector, whether it be software, etc. FMCG, they'll do well because there's a demand for them from the upper echelons. But then, textiles and leather goods, etc., which is mass market, there the demand would be low because the unorganized sector, which employs 94%, there the incomes have come down. So in a sense, there are certain sectors that are not doing well, and unless demand is generated, it will not do well. So capacity utilization, according to RBI, is less than 69%, and really the investment as a whole. So those segments which are doing well, they'll be investing more. There's no doubt about it. But for the economy as a whole, investment will not revive unless we get to about 75-80% capacity utilization as a whole. So therefore, there's a need to generate demand. How do we generate demand? That becomes the biggest question. Simply giving incentive to business will not work if there's no demand. Why would anybody invest more if the capacity utilization is less than 70%? In certain segments, it's much worse. So therefore, demand generation is the key. That's what I'd be looking for. And therefore, in a sense, if the government gives more subsidies at the lower levels, does the rural employment guarantee scheme increases it substantially? Because RBI data seems to suggest that people have been getting only about 50 days of work in the year where they need to get 100 days of work. Yes. And the reports that the money was inadequate, the 70,000 crores that was allotted in the last budget, and we are going to exceed that, by a fair bit of amount. So therefore, that needs to be stepped up very substantially. And as Ms. Naina Lal Kidwai has said, we need an urban employment guarantee scheme because a lot of young people have lost employment in the urban areas as well. And those people who came back from the rural areas to the urban areas have not found work. So therefore, we need that, and I welcome, the business community saying that. Now, what will that mean? Our, fiscal deficit will rise. And that is something that the government doesn't like because the credit rating agencies and the IMF and the World Bank, they'll be looking at what is the fiscal deficit in the budget. So therefore, the government has a tough task as to how to control the rise in fiscal deficit. Now, people have been talking that we can have monetization of assets, we can have disinvestment. But think about it, if the government disinvests, that means its capital stock is going down. And then it invests that money back. So net, there's no increase in capital investment.
As far as our fiscal deficit is concerned, yes,
no,
and Ms. Naina Lal Kidwai, already if we look at our fiscal deficit,
if I may just complete,
yes, sir.
The net, the government investment doesn't go up if the disinvestment target is very high. So you say that your capital, capex will be 5.5 lakh crore in the budget, but then you disinvest 1.5 lakh crore, 2 lakh crore, then it means the net capital increase is only 3 lakh crores. So therefore, if we need to look at the capex net of the disinvestment and the net of the monetization of assets. Otherwise, we'll not be boosting the economy. So the businesses have been demanding that even if the fiscal deficit rises, the government should increase expenditures because private sector cannot increase expenditures unless capacity utilization rises, unless consumer demand rises. So we shouldn't focus only on some sectors. We should look at the macro of the economy as a whole. And if you look at the Q2 data, the Q2 data seems to suggest that consumer spending was not back to 2019. Government consumption expenditure was below the 2019
Yes.
level. Okay, only the investment had come back up to that. So why did the Q2 number go up? Q2 number went up because people are investing in the valuables, like in the jewelry, in the gold and those things, because there's uncertainty, and your errors were very large. The errors rose by 250%, So actually there was really no increase in the Q2
Low
data as
purchasing
compared
power clearly is a big concern. And Ms. Naina Lal Kidwai, like Professor Arun Kumar explained to us, I think the biggest task is going to be how to boost demand. A concern which was there last year as well, but now it's even more because there is high inflation, purchasing power is quite low. And can the government really allow the fiscal deficit number to cross 6.8%, which was the budget estimate of this year? Last year, we know it the actual number was 9.5%.
So I think, the market will look for some calibration of the fiscal deficit. But I think there's still room for maneuver here to not necessarily adhere to what was committed at the outset. We do need money to continue in a pandemic. We cannot ignore the fact that there's a pandemic. It may not have hit as hard as wave one, but it is hitting us even today, as has already been mentioned both by Unnikrishnan and Professor Kumar, in terms of it being a K-shaped recovery, which means there's a whole bunch of companies at the bottom, all the contact companies, hospitality, tourism, you name it. There are people without jobs. There are companies which are shutting down because their very businesses have been impacted. So we do need to continue to have that support. So the view is, because of tax buoyancy, we probably end this year at 6.6, which fiscal deficit, which is not a bad number, the FY22 number. And there is an expectation that we will be able to decrease it somewhat from there. I think I've even seen estimates that suggest 6.1, on the basis that this asset monetization policy of ours, which has been very well set out by the government, but numbers were not achieved, get better achieved. And I hear Professor Kumar saying that, look, there's a cost to that. But at what better time than now? And I won't even call it selling the family silver. An LIC IPO is actually very good discipline in the market. It brings retail investors in. It brings transparency to the LIC balance sheet. It is a great asset to put into the hands of the rural community through the IPO that is envisaged. And that is a big one. I'd always said it was going to be a tough one to do. Whether it will actually be done before March 22, I'm skeptical, but it's certainly a next year product unless the markets totally collapse on us. And as for the other strategic disinvestments which have been envisaged, they are, I think, trickier, they're tough. Hats off to the government for having done Air India. That's a big feather in the cap, a very tough deal to have got off the ground, and it's done. And it's done because government was very practical in the way it moved forward on that deal. If that same degree of flexibility, practicality is demonstrated in the next few deals, I think we can achieve a fiscal deficit, and what better that is contained, and what better year than to do it than in a pandemic, when we need to spend, but also demonstrate our commitment to containing the fisc.
Okay. Mr. Unnikrishnan, now on the issue of demand specifically, which definitely needs some kind of a push, what is it that you will like to suggest to the finance minister for this budget? At a time when the purchasing power is very low, people have lost jobs due to the pandemic, and the inflation is a big concern.
Well, I would say that there is a lot of pent-up demand already, which was just about opening up before the wave 3, and between wave 2 and wave 3. The markets have started, people started buying, but with Omicron coming in, they had been certainly again, there is a withdrawal symptom right now. If we are able to get through with the current pandemic before the closure of the current financial year, and if nothing were to be happening substantially for the predominant part of the first half, H1 of the next year, I think the demand will come back to normalcy, is my current take. Yeah, if there were to be a wave 4 and it's going to be worse than the wave 2, then well, all what we're currently talking about, even if a budget were to be made by the finance minister, it is not going to be viable. So currently we are talking about what the world is doing, what, say, starting with the UK, Spain, or what America has done. I mean, they've had much more death rate than India. How today India has understood that we got, see, in comparison to last year, we got now 3 vaccines approved, 1 more getting approved. We got a treatment protocol already available, medicine available. So the fear factor related to COVID is not going to be what happened in year 20, year 21, year 22. So I don't buy the theory that demand is going to be further going down. It is only going to be going up, number one. Second, I'm totally in agreement with what Naina mentioned about that. LIC may get shifted to next year, but we also had the Container Corporation of India, we had BPCL, we had Shipping Corporation of India. So there will be a lot more of additional income going to be coming from disinvestment, where I'm sorry, I have to disagree with my friend, Professor Arun, because when you sell any of the shareholding and get money back into the hands of the government, that is going to be available for the government to create capital formation. It is not that it is going to be offset. It is going to be an add-on. That is arithmetic in terms of you're monetizing an asset and going to create another asset, which first one has become an OPEX, next is going to be converting into CAPEX. That's why it is calculated in any economic calculation. I'm sorry for correcting that one. So I'm very clear about the fact that on top of that, I need to be telling something that we have not had any CAPEX done substantially for the past 2 years, barring maybe for the rods. So the CAPEX going forward to create the demand is going to be in 2 different buckets. Bucket number 1 for a country like India can only be the government-oriented CAPEX, central government and state government. That should be comprising of at least 70% of the total investment going to happen. And I'm very clear about the fact that having been a party for some of the committees of the government of India, that they are already ready for at least substantial portion of the investment for next year. I don't want to come to specifics right now, but it is going to be in the roads area. So a lot of them are there. And I'm also at the ground level confirming to you that a predominant part of the industry which was waiting for things to be getting over, may be steel industry, maybe cement industry, non-ferrous metallurgy, the larger ones, even power. There is enough and more investment already happening in terms of orders getting concluded, finalized. You look at the balance, maybe the order register of a Larsen Tubro to all the another plethora of capital goods companies. Most of them had extremely good order booking. And one other major sector is the construction sector of the country, which comprises of 15% of the entire economy of this country. And you look at every major city, we had almost equivalent to 7.5 lakh numbers of dwellings unsold remaining in the metro cities of India. Almost 51% of them got sold in the pandemic time. Whatever could be the reason. So things are improving on that count. So I have the ground level information to confirm to you that the sentiments in the private sector currently is that we can live with COVID and we have to live with COVID and we cannot compromise the economy. That is also the understanding at state government levels. Just look at the number of cases when we had maybe 3.5 lakh a week back. How many places in India was under lockdown? Which factory got closed even one day? So I am not buying the theory that we need to live in an anxiety and a part of a fear factor. We're not going to live in, say, 1920. We're not going to live in 2021. We're going to live in 22-23, where we have the clarity that we know how to deal with COVID and we need to carry our economy forward. And all economic factors related to India, which
that's very interesting what you're telling us, Mr. Unnikrishnan, that industries clearly now have got the wherewithal to ensure that they manage to survive despite COVID pandemic, because now we've seen it for 2 years and with vaccination drive really kicking in and accelerating the way it has really, and now even children getting vaccinated. So there is a bit of confidence among the private sector as well. That's very encouraging what you're telling us. But Professor Arun Kumar, government-led capex is what the industry is again looking forward to in this budget. I want to seek your view on this issue specifically, because in the winter session of Parliament only, we know that the government had sought permission to spend about 3 trillion rupees additionally. So will there be scope now to further, spend more? Will there be scope for more government-led capex?
There's always going to be scope for government-led capex, provided the fiscal deficit doesn't rise. If the fiscal deficit rises, then that becomes a constraint on the increase in the capex. But let me
The
clarify.
budget estimate, sir, is already 6.8%.
Right, right. But I understand there's already 6.8%, and the government has therefore been holding back on capex expenditure in this year, which then means that less demand in the economy and the private sector then suffers because of less demand, and therefore the rate of growth does not pick up as much as it should pick up. But let me clarify, when you disinvest in the economy, when the government disinvests, then it's taken in as a revenue, which lowers the fiscal deficit. That means that what you're spending on the capex minus what you are getting back as the disinvestment, that is the net investment by the government. So the larger is the disinvestment of the demonetization program, less is the capex program of the government, because then the private sector has to increase its investment, and that is not very clear whether that would happen or not happen. So that's why I was saying that net disinvestment does not mean an increase in investment in the economy. And that's where, I think we have to take the net amount. Second point I'd like to make is that what my esteemed panelists are saying is about the organized sector. But what about the unorganized sector? The unorganized sector has 6 crore units in the micro sector and 6 lakh units in the small and medium sector, whereas the organized sector is, you can say, about 6,000 units that are registered in the stock market. So we are not talking only about the units in the stock market. We also have to talk about the investment in the small and the medium sector and the micro sector. Now, is the investment rising there? Clearly, that's not happening because demand has shifted from the unorganized sector to the organized sector. And, like for instance, if you look at the e-commerce, the e-commerce has been rising at 30-40%. Now, in an economy that is stagnating or that is below the 2019 level, if the e-commerce sector is rising at 30-40%, that means the rest of the trade must be declining. And if the rest of the trade is declining, then the investment there would not take place at the same level as was expected earlier. So in a sense, what I'm arguing is that the unorganized sector, unless that comes up, your demand will not come up back in consumer demand. And that's why the RBI data, which is based on the organized sector, that shows that the consumer confidence has not returned. The consumer confidence, which was at 105 before pandemic, has been around 55, 60. So consumer confidence has to go up. Capacity utilization has to go up, and that's why I'm arguing. And exports will not necessarily help because imports have risen further. So your increase in demand because of the external sector is export minus import, and export minus import is going negative. So therefore, the external sector is not going to increase demand. So the only factor that is left is government, and the government expenditures have to go up both in consumption and in investment. Now, consumption expenditures may go up because you are going to give more subsidy given that the UP elections are there. So therefore, transfers will increase. That'll put purchasing power in the hand of the poor people where you give. So that would be a positive, but that may not be enough. So private sector will begin to invest more as a whole. I'm not saying that some sectors in the private sector will not invest more. Some will definitely invest more. But as an aggregate, will the private investment go up? That's the big question. And that's where I'm saying that the demand is a problem, and that will not happen in spite of PLI and in spite of other things.
But there's no doubt that
Mr. Unnikrishnan, I believe, has a different point of view. Yes.
Yeah, because I wanted to clarify what
Ms. Naina Lal Kidwai first, then Mr.
Especially for an economy like India, where 90% of the people employed are in small scale and medium scale MSME. I totally agree with micro. Okay,
not small and medium, micro.
All of them. Let me confirm, Arun. Let me confirm it. Then I'll tell you. But please remember, this is a part of a supply chain. Majority of the MSME are dependent upon in the upward chain of value to the larger organizations of the country. That's the way our economy is, or maybe the manufacturing economy is created in the country. So if you have got a demand growth and a capacity growth going up in the larger industry, and if the GDP of our country were to grow, I'm not talking about the current year's growth, that is neutralizing last year's negative of 7.3 and is expected to be 9.5, so +2 only. So we'll come back to the old day. But I am expecting anywhere in the world, nobody has told that Indian economy is going to be growing at anything less than 7 or 8%. 8.5 is a normal number. That is going to be the miracle number of India, 7%. If that were to happen, then everybody, because I'm telling you from the ground level, today for the construction sites, I'm talking about mechanical construction sites for factory buildings, or even normal one, there are no workers available. We need to be having the people who run away to be brought back, which was also spoken midway through in the fiscal program that the finance minister announced post wave 1 and wave 2. So that we need to make it happen.
Yes.
So things will happen in the area. That's number one. Second, on the e-commerce, let me clarify to you. Human consumption, other than the clothing and all, I agree with you that, okay, that unless you go out, why would you buy anything normal? But majority of the items consumption is happening. The moment you get into the e-platform, there were only 2 or 3 people needed to be standing in a shop counter to give it to you, vend it to you. Whereas when you sit at home and order for the home delivery, you need more number of people. So it is not going to be that jobs are taken away. If the chap who was standing at the counter of the shop is today driving a motorcycle and is the platform, whatever you call gig worker or one of the platforms like maybe an Amazon or a Swiggy equivalent. The jobs are not taken away. These are all, we need to demythify some of this kind of, constricted thinking. No, modernism, when it brings in more jobs. The moment the economy grows, jobs will also grow in this country. Let's have the clarity. And all of us, and I'm sure the government is seeing that.
It's a very encouraging, comment that you are making, Mr. Unnikrishnan. Professor Arun Kumar disagrees with you, I guess. He wants to respond. But before that, Ms. Naina, your point. 10 seconds, very quickly.
So, I totally agree that with what Unnikrishnan has said, that I think e-commerce has been our savior because it has helped with the whole digitalization process. It helps with logistics at a time when people couldn't go to purchase goods. And in fact, what we are finding is that a lot of small manufacturers, home-baked sort of products, I know how much I've been purchasing online, something I never did, from people who are making food in their own kitchens and pantries, and women, in fact, which is what's wonderful. So it's enabling a go-to market, which was otherwise not possible. This is all about employment generation. And frankly, the companies that have been able to pivot to change into this new area have actually done better than they were doing pre-COVID. They've found a reason to exist. And it is those that haven't been able to that suffer, who need a helping hand, so often in terms of skilling and just being able to use these digital products and tools which could be available to them. The whole logistics chain in the country also has really arisen. I want to just stress a little more on the whole real estate space. Because real estate is often just seen as an urban demand function. I was very struck by the fact that in rural India now, one of the biggest employers is construction. It's happening because at government's behest, maybe because of infrastructure projects. It's happening because people are building check dams and sanitation and toilets or whatever. But construction is a big employer. So getting construction into the rural areas back in a manner which continues and is higher than where it is today will help generate jobs and therefore demand and consumption. So we must look at construction, whether it is affordable housing, whether it is infrastructure, to help us. And equally in urban India. Now, have we done enough for the real estate sector? I think there was some noble efforts made to help at least some of the projects close. That was a smart move because, for companies that were just left with that last 5% and they were stuck because they couldn't get the money or they couldn't get labor, all these issues are very real. But we have to continue to help the real estate sector because on the one hand, it continues to impact the banks and the NPAs. And on the other, people's money is stuck because they aren't being able to get the flats they've maybe paid up 80-90% of their money for. So that impacts their perception, their consumption, and let alone the fact that the real estate industry itself needs help. So I would give construction and real estate a big push because that, in fact, will oil the wheels of the economy and industry and take it forward. I think I would just end by saying
that... So you believe
the whole...
construction and real estate should be the key? Yes.
Absolutely. Yes, and I would add, the whole area that caters to India's commitments, and Unnikrishnan is the best guy to comment on this, and he alluded to it in terms of the whole renewable space, has to continue to get focus as we look to march forward, also looking out for the whole climate change agenda. The SDGs are on our doorstep. They also deliver success. They also help us deliver to our global commitments, but they also bring jobs. So everything to do with the delivery of these sort of industries where our commitments have been made would deserve a very high focus. And I do believe they are achievable in this year.
Okay.
Yeah.
Okay. Professor Arun Kumar, you wanted to respond. Then I have to talk about the big, bold reforms.
Okay, so in the unorganized sector, there are two kinds of units that we have. One which are complementary, and the other where there's competition. So those sectors which are complementary to the organized sector, they will grow along with the organized sector. Those where there's competition, they are going to get back, set back by the thing. And this is something that we were seeing before the pandemic, when the rate of growth dropped from 8% quarterly to 3.1% just before the pandemic came. And also in terms of unemployment, we saw that we reached a high unemployment rate of 45 years. So in other words, these tendencies where the unorganized sector is getting displaced, they have aggravated further in the pandemic year. And that's why I'm saying that the demand will remain a problem. And that's why, my argument was that this is the case. Now, also, if you look at the data that has come out recently, the bottom 60% in the Indian, economy, they have lost incomes. The top 40% have gained incomes. And that points to what I'm trying to argue, that if the bottom 60% are losing incomes, and then there are other estimates which have come, which has said that 84% people lost incomes during the pandemic. Now, if 84% lose incomes during the pandemic, then that means their demand is bound to come down. They cannot demand the same as they were demanding earlier if their incomes are coming down and inflation is hitting them. So that's why we need to look at the aggregate as well as the micro. What happens is that, when we focus on the micro, we miss the aggregate picture. And the aggregate picture suggesting that the demand has not come back and will not come back unless the government pitches in to increase demand. And that is where the government's role is very important. And we should not forget the unorganized sector. Unfortunately, our GDP data does not have the unorganized sector in it. And therefore, the data is based only on the organized sector, and we take organized sector as a proxy for the unorganized sector. So the Indian economy at the moment is not growing at 8 or 9%, but it's at 0%. That's my estimate. Because if the corporate sector is growing at 22%, then where is the sector that's going down so that the rate of growth is only at officially 8% or 9%? So there must be some sectors that are going down, and that's why the aggregate is 8%, whereas, the thing, but if you include the unorganized sectors, then the decline would be even greater. And as I said, even the export sector is not helping.
Well, absolutely. The lack of the data, proper data from unorganized sector is clearly a cause of concern. And what you're telling us is also very, very important. But, I want to also seek your views on the issue of reforms. Now, let's begin with Mr. Unnikrishnan on that aspect. Will the fate of, the farm laws going to impact the momentum of reforms for this government? Do you expect that having any kind of an impact on budget 2022, or do you still hope that some big, bold announcements can be expected?
I would say that it's a matter of which area will there be a focus and diversion of funds into. So certainly for the farm sector, there will be a lot more. Whatever we spoke earlier, it is absolutely clear that the government has got to take care of the coming elections, because unfortunately it's a wrongly timed budget. Maybe a few weeks down the line, there will be elections starting on. So they have to cater to that. So there will be a major push for the rural economy, agroeconomy and agriculture related. A lot more will be announced in the current budget. But that should not deter us. At the end of the day, that is going to be in the rural hands, which Naina mentioned about in the beginning itself. The having money in the hands of the bottom of the pyramid is also going to increase the consumption, which again Arun complained about that. It should happen that way. So perfectly.
No, I didn't complain. I said that should be done. I didn't complain.
I'm only trying to say that Arun, it will be done. So that will be there and we are all okay with that. But the next side that you need to be understanding, reforms that you asked about, my understanding right now is, since the main elections are going to be quite far away, I'm aware of the fact that I was chairman of the National Committee for the Industrial Relations, where we had all the labor laws passed through the Parliament of India. And it was not going to be implemented. But today, the government has taken that it will be done in the reverse manner. Social security is going to be implemented by the government as a first item. Yeah, good. I mean, nobody complains about that. We never said that it should be done. First should be this, which is the one that will be done. We never asked for it. So implementation of the reforms which are already done should be taken care of. And further reforms, where are we needing it? This is what we need to be understanding. All of us need to be understanding. unless we create wealth, we'll only distribute poverty. So we are seeing your country has created nearly maybe 45 unicorns in the current year, and I expect it to be making it to a century. Is the expectation that we have. It may not happen that way, but at least that momentum. So this is somebody, I mean, we are creating wealth. And it can't be consumed by whether you divide them as rich people, middle class, lower class. End of the day, you need to have a path available to lead to create wealth for the country so that the average GDP goes up. Money available in the hands of the government is sufficient to create infrastructure. The moment you have infrastructure created, it will create jobs. So this is what we need to do. So in that one, I would say India is on the right path. No other country in the world, including China and America, can boast about what has happened in your country in the past 24 months, despite this COVID happening. So going forward, I'm expecting that the COVID under control, we are going to be marching ahead. In that, it will be creating jobs. Especially when somebody, I mean, like I'm so happy when Naina mentioned about that. Upskilling of Indians. I mean, we have, see, what is that we talk about? We have got demographic, I mean, we talked about dividend earlier. And that is what, I mean, you have on an average, maybe 13.5 lakh engineers passing out from the engineering colleges of this country. If you skill them properly, the way the world is wanting to move to digitization, instead of going and writing the coding in an IT company, they'll be helping for the digitization for the world. No other country has got so many of them coming out. So these are the kind of thing we need to look at positively. And if we are, I mean, I'm sure the government is seized upon all of this, and I don't think they'll be deterred by the whatever the negative feelings related to whatever is happening, political turmoil or equivalent of that. I am very clear about the fact that reforms are going to continue in the country.
Yeah.
What is your view? So, you expect reforms are going to continue, but Ms. Naina, will the fate of farm laws hit the momentum of reforms in the upcoming budget, in your view?
You know, the farm laws were going to have an impact over time. And frankly, there are some states that already have implemented the same that was sought to be achieved through the central dictate. So agri-products will be high focus, but this is not going to be a year where there's going to be too much tweaking of this. I mean, one of the big asks out there was to bring down the minimum support prices. That's not going to happen in a year like this, when we're all expecting a much more populist budget. So that may not drive change in terms of what was sought to be done. And to bring the private sector engagement into agriculture in a big way. And I do think that the reform that was set out to be achieved, which fell away, would have helped with more investment in the sector. But there's much that can happen without it. I mean, the whole area of agribusiness is wide open for us. And we need to invest in the logistics and value addition that happens in agriculture as well. There's so much that can be helped through, water and use of water in agriculture. And that can be job creating, because we have to develop the systems and processes of using water well, as in productively, and cut down the use of water in agriculture. So there's much that can happen in agriculture without the big reform that was sought. And that, I'm sure, is something that each state government will continue to do. You know, we haven't touched on one very important area, which is inflation. And the big bugbear out there, the elephant in that China shop, or the bull in that China shop, is inflation. And this is a concern. It's a concern because we have, through our own excise duties and the prices we put on fossil fuels, etc., which tided us over and helped with the fisc, is now beginning to trickle into every sector. Food prices moving up is a worry. And again, will impact demand and consumption in a very serious way. So the dilemma for the Reserve Bank of India will be what comes first. At what stage do they actually begin to contain inflation, and put interest rates up, or allow the economy to...
Definitely, inflation is going to be a big challenge. I have very little time now left on this discussion. Professor Arun Kumar, I want to give you the last word now. Do you, or can you rather tell us, one or two things very quickly? If you don't hear in the budget this time, you will be disappointed.
So, for instance, the Rural Employment Guarantee Scheme needs a much larger allocation so that the demand begins to revive from there. That would be one. Second is a beginning on the urban employment guarantee scheme, which is going to be difficult. But I think we have to do something so that, again, there that demand begins to revive, much more. And as Ms. Kidwai has said, on prices, we need to move, because if prices keep rising when incomes in the unorganized sector are declining, then the demand would not revive. So what can we do? I don't think RBI can do very much on that, because there are supply bottlenecks, and these supply bottlenecks cannot be changed through monetary policy. Also, there's excess liquidity in the banking system. That is what the RBI has been complaining, 6 to 7 lakh crores excess. That could be borrowed and that could be spent. That the private sector will not do. I think the government has to step in and do that. But then, of course, the fiscal deficit would rise. But this liquidity that is slushing around in the economy, that is something that the RBI would have to do about. But otherwise, directly, I don't think the RBI can do much on the prices. Education sector, which Ms. Kidwai mentioned, is a very critical sector, because people have lost years. And therefore, people are sliding back in terms of, their learning. So we need to do something about the education reform. That's very crucial. Agriculture, as she rightly mentioned, needs a lot of investment. That's where I think a lot of investment should go in. Forget the bills for the moment, because that's not going to happen anytime soon. But you need a lot more investment in rural areas and agriculture.
All right, I'm now completely out of time, but I appreciate all of you for joining us here on this discussion on Urban Debate on Mirror Now this evening. Of course, that's a long wish list that you all have already given to us for the Finance Minister. We would like to connect with you again on 1st of February when the budget announcement is made, and we'll see what really comes out eventually from Budget 2022, the big event that we all will be looking forward to. I appreciate all for joining us here on Mirror Now this evening.